The initiative is meant to beat congressional critics to the punch on IRS reform proposals. Peter Barnes reports from Washington.
The administration announced proposals to fix the IRS that will put the Treasury Department more in charge of the troubled agency.
Continuing improvements on the quality of service that we all, as ordinary citizens, receive from banks, from brokers, from credit card companies, have brought ever more sharply into focus the IRS's problems in the customer service area. At the IRS and at Treasury, there is a recognition that we can do better.
The IRS has been under heavy fire on Capitol Hill for botching a $3.5 billion upgrade of its computer systems. Other critics simply want to gut the current tax code, replace it with a flat tax, and close the agency down. In June, a special bipartisan commission will announce its recommendations for reforming the IRS. The Treasury Department's announcement beats the panel to the punch and lays down the administration's marker in the debate.
The message is clear. It is time for change.
The administration plan would put a Treasury-led management board in charge of fixing the agency's computers. Put a management professional, not a tax expert, in charge of the service. Speed up hiring of top managers. Outsource more work to private sector subcontractors. And streamline the 9,400-page tax code. A member of the bipartisan commission welcomed the announcement, saying the panel will make some similar proposals. But he said it wants IRS oversight by an independent outside board, not one operated within Treasury.
We want to make sure that the IRS is nonpartisan, immune from political pressure, and we think of the days when Nixon had an enemies list. The enemies list was meaning the IRS investigate and harass taxpayers.
Another member of the bipartisan commission is president of the union, which represents nearly 100,000 IRS workers, some of whom could lose their jobs to outsourcing.
I think it's foolish. I think that taxpayers are not interested in having the private sector know their most private financial information.
Peter Barnes, CNBC Business News, Washington.
Another legal setback for the tobacco industry. The U.S. Supreme Court has ruled that Florida's court case against the nation's cigarette makers can go ahead. It turned down industry arguments that the law unfairly seeks to stack the deck against tobacco companies. Florida is one of 20 states that has sued the industry in an attempt to get reimbursed for Medicaid costs. Tobacco stocks down today. Philip Morris off 1 5/8. RJR down 1 1/8, and Lowe's off 1 5/8.
Shares of Advanta getting pummeled today, finishing down 8.5 at 31 7/8. That company warning it expects to report a loss of 44 cents a share in its first quarter. That is well below forecast. That due to losses from delinquencies in its credit card businesses. Chief Operating Officer David Brooks resigning as a result. And the other credit card issuers were also down on the day. MBNA down 2, First USA down 5/8, and Capital One Financial down 1 5/8.
Treasury prices were lower from the get-go today. Fed Governor Edward Kelly said on Friday that the Federal Reserve could lose credibility if it didn't raise interest rates at the end of the month. Later, San Francisco Fed President Robert Parry, speaking in Germany, said the Fed must curb inflation pressures before they emerge. But he tempered those comments by saying that there are few signs of wage inflation. As a result, the long bond came off its lows, finishing down 6 ticks, the yield at 6.95%.
The rebound in the bond market helping stocks to shrug off earlier losses. The Dow falling as many as 80 points before rallying in the last half hour of trading. Leading the way back was Boeing, up more than 3 points. IBM, the big loser, down 4 1/8 at 139.5. After falling more than 6 points early on today. And not helping matters early on as well was billionaire investor Warren Buffett. In a letter to his Berkshire Hathaway shareholders, Buffett saying that he thinks the stock market is overvalued. But he does remain bullish on McDonald's. Berkshire Hathaway increasing its ownership to 30 million shares from 9 million last year. McDonald's gained 2 1/4 to 46 3/8. Merck also on the upside by 2 3/4 to 91 1/8. Its angina drug under development was shown in 2 studies released today to reduce the risks of heart attacks when used with other drugs. Here's a look at the final numbers for you from Wall Street. The Dow up 20.02, 69.55.48. NYSE Composite average up 0.67 on 494.4 million shares changing hands. Breadth of the market was negative, 835 stocks unchanged. Average share gained 7 cents. New highs, 49.63 new lows. The transports up 13 1/4. The utilities up just about a half a point. NASDAQ got hit very hard, down 13.5 points on 535.2 million shares changing hands. S&P up 254, Russell 2000 off 3 2/3, and the Amex off about 4 1/4 points. And Maria Bartiromo has been following the market and joins us live from the New York Stock Exchange with more. Maria, big rebound today.
It sure was, Sue. The bank stocks were among the most notable, in fact, to turn. Citicorp finished the day up 2 1/8, Chase Manhattan up 2 3/8. The company has an important analyst meeting tomorrow, and analysts say that should support Chase Manhattan shares even further. Nations Bank up 1/8 point. JP Morgan also up 1 3/4. The banking index finished up 1 2/3 points. It had been down sharply early on. And the drug index also rebounded, having been down earlier, but finished up a strong 8 points. As for the technology stocks, a mixed performance there, although mostly down by the closing bell. Still a partial rebound for some by the close. Barini & Associates out in Connecticut, a firm which tracks program activity, said the rebound was due to a late day buy program. Traders told me that the buy on the dip mentality really remains down here on Wall Street. So as soon as stocks get to levels seen as bargains, people just jump back in, considering we still don't have confirmation on an interest rate hike, and even a 1/4 percentage point hike probably would be seen as a positive because it would lift the uncertain cloud that remains with regards to interest rates. Back to you, Sue.
Thanks, Maria. Maria Bartiromo live from the New York Stock Exchange.
Well, as you know, there are 4 new component stocks in the Dow Jones Industrial Average, the 4 ending the day mixed, as you can see here. Now, the people who manage the 100-year-old index want to bring the average more in line with the growing industries of technology, healthcare, and finance. But as CNBC's Tim Tindall reports, critics say some significant sectors of the economy are still not represented, and the changes could increase the Dow's volatility.
The first makeover of the Dow Industrials in nearly 6 years comes as the index has soared to new heights, rising 75% over the past 2 years. The changes are designed to make the Dow more reflective of the economy, but get rid of some underperforming stocks as well. Added to the index are healthcare products giant Johnson & Johnson, the Travelers Group, a financial services firm, computer maker Hewlett-Packard, and the retailer Walmart. Removed were Bethlehem Steel, the media company Westinghouse, Texaco, the energy giant, and old-line retailer Woolworth.
The basic manufacturing side of the economy, like steel, is obviously much less important. Steel and autos used to be the real bellwethers of the economy, and today it's services, information, technology.
While most money managers say the changes to the Dow Industrials are at best long overdue, investors here at this Fidelity Center in Midtown Manhattan are split. Some welcoming the changes as a recognition of blue chip quality, while others say the Dow components mean very little to their personal investment decisions.
The Dow doesn't really affect me. I'm just investing in my mutual funds, conservative stocks.
If the company is recognized and is considered worthy of being added, then that's certainly something that, you know, will highlight my choice.
It affects the way I feel about the market every day, but I buy stocks on their fundamental basis.
While money managers generally don't feel the changes are significant, some experts say with the addition of higher-priced growth issues, the Dow could be hit harder during a downturn since the undervalued stocks are no longer there to provide support. And some market newsletter editors believe it may be worth taking a new look at some of the stocks being removed.
Over the long history, deleted stocks have generally done better. It's one of the interesting observations you can make on the Dow, and one of the reasons that our system tends to work. You have these seemingly moribund companies, which nonetheless are among the most economically important, resourceful companies in the world.
But even with the addition of more technology companies like Hewlett-Packard, some critics of the changes say by excluding NASDAQ stocks like Microsoft and Intel, the new Dow 30 isn't really an accurate reflection of the economy. Tim Tindall, CNBC Business News, New York.
As a billionaire investor's Midas touch turned to bronze. That story and more when Market Wrap returns, so don't go away.
This program is brought to you by Mobil, the energy to make a difference.
I've been an engineer for Porsche for 26 years. We're looking for perfection, such an elusive goal. Yet we see it all around us. It's the basis for being successful. The search for perfection needs support from partners, and one of these partners is Mobil. All Porsche engines are developed with Mobil One, and we tell owners to keep on using it. I think we have found with Mobil an excellent partner.
Lousy shoes.
E-Trade gives you what you need to turn a hunch into an investment.
Excess athletic shoes. Sell.
From $14.95 a trade, E-Trade. Get online.
www.what?
Look.
The logo's rotating.
That is very cool. I like that.
Yeah.
Do you guys do this all day?
No, not all day.
Just most of the day.
Wow, that is very cool. What is that?
The logo's on fire.
Why is the logo on fire?
It's a flaming logo.
Yeah.
We're checking out different business websites.
We're trying to determine our website strategy.
Website strategy, huh?
Yeah.
You ever think about using this to sell something?
IBM helps business websites do business.
A demonstration of the remarkable performance of the V8 Intech-powered Lincoln Continental. With a luxurious leather and wood-trimmed interior and amenities like a two-person memory profile system and 6-way power seats, Continental can do 0 to completely spoil in 4.5 seconds. The front-wheel drive Lincoln Continental.
One ticket, please.
That'll be $7.50, please.
CNBC presents the motion picture thriller Hollywood Inc. What you thought was just a movie transforms into a marketing mega monster. Witness how electrifying deals are made. You'll be amazed at where the money goes. You'll be stunned at who's really running Hollywood. Discover the spine-tingling truth about making movies and making money. Hollywood Inc. Coming to your screen Friday at 10 p.m. on CNBC.
A white night for ADT. Tyco International saying it will buy the electronic security system provider for $5.6 billion in stock. That works out to about $29 a share. Tyco is a leading maker of fire protection systems. It says it expects the deal to add 20 cents a share to its 1998 fiscal earnings. ADT has already received an offer worth $22.50 from Western Resources that it rejected as being inadequate. Western holds a stake in ADT already. It says it is studying the new offer. Shares of ADT up 3 7/8, 25 5/8. Tyco down 2, and Western Resources up 7/8 on the session.
H.F. Amundsen is raising its hostile bid for Great Western to $6.73 billion, topping the friendly offer by rival Washington Mutual. The new Amundsen offer would be worth $48.30 to Great Western shareholders, which is about $3 a share more than Washington Mutual's $6.3 billion bid. Now, Great Western says it still opposes the Amundsen offer. For its part, Washington Mutual says it will not raise its bid. Shares of Great Western today down 1/4. Amundsen was off 1/2. Washington Mutual up 3/4.
Rupert Murdoch expanding his empire. His News Corp reaching agreement to buy marketing company Heritage Media for about $750 million in stock plus debt, or $20.50 a share. News Corp says it will sell Heritage's radio and TV broadcast properties and keep its marketing services operation. Heritage finishing today's trading session up 5 7/8 at 18, while News Corp lost 3/8 to 20.5.
Billionaire John Kluge has made himself rich through savvy investments in everything from TV stations to cellular phones, but his newest company, Metro Media International, has not done well in the latest bull market. And now investors are pushing him to give up his long-term strategy and instead split up the company. What's a billionaire to do? CNBC's Greg Miles reports.
Billionaire John Kluge has become one of the world's wealthiest men by turning a simple formula into an art. Buy assets cheap, hold for the long term, and sell high. Kluge has turned his American TV stations, radio properties, cellular phone assets, and even sports teams into a fortune valued at $7 billion. Many investors have gotten very, very rich along with him. But is John Kluge losing his touch? Today, Kluge, age 81, is facing unusual skepticism from Wall Street. His new company, Metro Media International, has seen its stock plunge in the past year. The entertainment and telecommunications company has completely missed the bull market.
In order to get proper valuation on this stock, they have to simplify their strategy and focus their outlook. Today, this company looks like a hodgepodge of John Kluge's personal assets.
That has prompted Moran and other Wall Streeters to insist that Metro Media sell or spin off its entertainment assets and use that money to grow its overseas telecommunications business. Kluge apparently is listening. The entrepreneur and his highly regarded heir apparent, Stuart Subotnick, is considering several big moves to boost Metro Media's share price. The most likely option? One Kluge associate told CNBC, "I expect entertainment to be sold sometime this year. Kluge is just getting too much pressure from Wall Street and shareholders." Today, Metro Media sells for around $10 a share, but some analysts estimate it could command $25 a share and quickly if the entertainment unit were sold. The heated talk about Metro Media's stock price reflects Wall Street's clash with Kluge's and Subotnick's historic long-term view of investments.
When Mr. Kluge brought the company public as it's currently configured, the strategy announced to the street was basically this is a long-term commitment to build. And unfortunately, investors forget the long term and only think about what's going to happen in the next quarter.
But Kluge may have to wait to sell the entertainment unit, which includes once troubled Orion Pictures, a giant but aging film library, and an independent film studio. The big problem? Experts say that simply too many other movie properties are on the block, and Kluge is unlikely to get the $650 million price tag he reportedly wants. After all, Kluge's entire company sells for around $650 million in the market today. It may take years for Metro Media to harvest profits, but experts agreed that the key lies in the overseas telecommunications business. It includes telecom, cable, and TV properties across Russia and Eastern Europe, with Kluge buying dozens of licenses at cheap prices, giving Metro Media exclusive rights to rich city markets.
Clearly, there's no reason to expect that you wouldn't have a 10 times the asset value 5 years from now that you presently have.
Already, Kluge has operations in more than a dozen countries and license rights to ultimately serve millions of customers. Properties which experts say could easily grow to more than $1 billion in value. It could take years to prove whether this venture is successful, but Kluge's reputation as a genius is powerful. So given his age, many investors may decide that this is one last chance to rake in fat profits. Greg Miles, CNBC Business News, New York.
Shares of Metro Media finished the session up 3/8 today at 9 13/16.
Well, wouldn't you know it, a special St. Patrick's Day edition of Taking Stock with three of my favorite people, Walter Murphy, Bernadette Murphy, John Murphy, and you. That would make four.
Your favorite Irish people.
That's right. That's in Taking Stock.
But next, Ford says goodbye to some longtime models and temporarily shuts production of its best-selling car, and we'll tell you all about it when we come back.
According to Mutual Funds magazine, tough guys finish first. The fund industry's toughest portfolio managers, Lawrence Oriana and Hans Utsch, have made the Kaufman Fund the #1 fund since the market low of December 4th, 1987. The fund invests in small companies with substantial growth prospects. The Kaufman Fund was awarded Morningstar's highest 5-star rating. Call now for your prospectus, 800-824-4200. The Kaufman Fund, 800-824-4200.
I run a small business, Wilderness Air. In Kodiak, Alaska, we provide some of the best salmon fishing in the world.
One of the things that Pete likes about my mailboxes, etc., is that we're able to provide a lot of the services that a small business owner needs.
Because it's not just shipping fish. The fax machines, the copiers, receiving my mail, airplane parts, coming and going.
Everything that one business needs in one location.
I've brought John 65-pound king salmon.
They're more like this.
No, they're this thick.
Mailboxes, etc. Making business easier worldwide.
I need 2 hands for itching and 2 more for flaking.
All you need is Scalpicin, a clear liquid you don't wash away like shampoo. With a medicine for deep scalp itch and dandruff these dandruff shampoos don't have. Scalpicin.
No flaking, no itch.
To the investor who sets his own course, one company stands out, J.B. Oxford. The pace setter of discount brokers can help you achieve your financial goals through their proven record of performance, service, and integrity. J.B. Oxford offers equity transactions for only $20. $20 to buy or sell 500 shares of IBM, 1,000 shares of Walmart, 2,000 shares of Mobil. $20 to buy or sell any listed or NASDAQ stock. $20 to talk to your own personal broker, not just an order taker, a dedicated financial professional. Then you can choose from a vast array of investment opportunities and even trade for less with J.B. Oxford services like Telephone Trader and the Internet Investment Center. To discover the pace-setting services of J.B. Oxford, call now, and your first transaction will be free. Call 800-656-1776. J.B. Oxford. One $20 transaction fee.
Tonight on Rivera Live, yet another alleged confession by Timothy McVeigh, but the judge in the Oklahoma City bombing trial refuses to grant a delay. Can Timothy McVeigh get a fair trial? Plus, why are convicts being set free in Florida? Tonight on Rivera Live.
Texaco is facing another racial discrimination lawsuit. A class action case has been filed in U.S. District Court in New York on behalf of African Americans who applied for employment at the company. In December, Texaco settled a racial discrimination suit against salaried African American employees, but the settlement did not cover those minorities who had applied for positions but were never hired. No comment from Texaco. Texaco finished the session up 1/2 at 101 3/4.
On this St. Patrick's Day, you may be interested to know that 80% of Ireland's foreign investment comes from the U.S. And in the last few years, U.S. firms have been flocking to Ireland. Pharmaceuticals, investment, and manufacturing firms are all crowding in, but high-tech companies have led the migration. CNBC's Tom Costello reports now from Dublin.
These are the idyllic images most of us associate with Ireland, a place of extraordinary beauty where life seems to meander at its own leisurely pace. But this is also a place where some of America's fastest growing companies have staked a claim. 476 U.S. companies now operate here. They employ a staggering 27% of Ireland's manufacturing workforce and rack up $15 billion in exports a year, 30% of the country's total. Why have they come?
Well, the two crucial selling points we have are, number one, our tax rate, and number two, our workforce.
In addition to grants and subsidies, Ireland offers companies a maximum tax rate of 10%. Other EU nations offer tax rates of 35% and higher. Membership in the EU means companies have access to the entire European marketplace, and Irish students are encouraged to study subjects that will make them attractive employees. Right now, a quarter of the population is in school.
And they're able to step into what you can see here is a pretty high-tech environment and do very well for us.
Hewlett-Packard makes inkjet cartridges here, its largest such plant in the world, and it's expanding. It plans to employ 2,000 people within 3 years. The same true at Motorola and IBM. Intel now has 3,000 people here, while 3Com's hoping its $110 million expansion will help it keep pace with demand. The company chose Ireland over other European countries largely because Ireland's social and labor laws allow for flexibility.
This plant here operates 7 days a week, 24 hours a day, so we do require and expect quite a flexible response from the workforce to peaks and troughs with demand.
This Irish-EU-American partnership has produced an average rate of return on manufacturing investment of 25%, 4 times the EU and world average. Companies here say that more than makes up for the one negative they contend with, the fact that Ireland is an island, and everything must be shipped back out. 150 years ago, during the Great Irish Famine, many people here saw America as the promised land. Today, many U.S. companies migrating to the Emerald Isle see Ireland in much the same way. Tom Costello, CNBC Business News, Dublin.
President Clinton has given a labor mediator 2 more days to reach a labor agreement between AMR and its pilots. White House spokesman Mike McCurry says Mr. Clinton acted in response to a letter from Emergency Board Chairman Robert Harris. It said the two sides were in intensive talks and needed the time to increase the chances of settlement. Mr. Clinton will now wait until Wednesday to announce ways to prevent a strike. Shares of AMR finished the session up 5/8 at 86 3/8.
Rockwell International says it plans to spin off its $3.1 billion automotive parts business to shareholders. This in order to focus on its semiconductor, automation, and aviation businesses. The automotive business, based in Troy, Michigan, has about 16,000 employees worldwide. Last December, Rockwell sold its aerospace and defense units to Boeing for $3.2 billion. Rockwell today finishing up a quarter at 68 1/8.
Meantime, Quaker Oats saying it may be forced to devalue its troubled Snapple beverage line this year. In its annual report, it says that because of the disappointing performance of the unit, it may have to take that action. It is estimated that Snapple was worth $1.7 billion at the end of the year, the same that it paid for it in 1994. Snapple's sales, however, fell 8% last year and lost more than $100 million. Shares of Quaker Oats up a half at 37 3/8.
And you're watching Market Wrap on CNBC.
Tonight on Equal Time, they're a political odd couple. Liberal Jerry Brown and conservative Laura Ingraham debate campaign fundraising. Then on Hardball with Chris Matthews. Is the press giving the president a fair shake? Find out. Tonight, starting at 8 p.m. on CNBC.
To grow stronger, America depends on its bounty, both natural and man-made. Finding new ways to get these goods to market more efficiently and reliably is the noble pursuit of Norfolk Southern, the thoroughbred of transportation.
For nearly 50 years, we at Neuberger and Berman have been competing in the mutual fund industry. Experience can give us an edge over the competition and enable us to clearly see what others may not.
Let's drop the spinnaker.
Of course, when it comes to investing, what could be disaster for the less experienced can prove to be opportunity for those with seasoned judgment. Another good reason our principals and employees have over $100 million invested in the funds we manage. Neuberger and Berman Funds. For more information, call 1-800-383-FUND.
Value Line, delivered weekly to over 100,000 investors everywhere. Value Line, where investors turn first.
I don't have time to do my own research. I rely on Value Line's top-ranked stocks and analyst commentary to pick winners.
I like the numbers. Value Line's historical data makes it easy to determine a stock's potential.
I look for stocks with low risk and steady earnings growth. Value Line helps me meet both these goals.
I invest for the long haul. No one has a crystal ball, but Value Line's 3 to 5 year forecast minimizes uncertainty for me.
These investors are talking about the Value Line Investment Survey with 1,700 full-page stock reports. The entire reference library on all 1,700 stocks, plus all the latest rankings, is yours as a bonus with this 10-week trial subscription. For only $55, Value Line will keep you up to date for 10 weeks. Call this number on your screen for your bonus reference service, plus these extra bonuses, this Wall Street Dictionary, and our new video, Investing the Value Line Way. Call and order now.
You're watching CNBC.
Market Wrap continues now. It is 1:30. Welcome back. I'm Sue Herrera.
And I'm Ted David. Call it the luck of the Irish early in the session. Plenty of green.